Hey guys, welcome back. In this video, I just wanted to go over general market trends, some of the stocks that I'm looking at, some of the trades I'm looking at making here in the general market, some of the stocks that are definitely trending now on my charts. So I'd like to start out, talking about the Dow 30, moving over to the S&P, Russell 2000, and some of the tech stocks, and we'll look at the 10-year Treasury, and also be talking about MoneyGram, Skyworks, Apple stock, and also Afria. So let's get started. Here at the beginning of the video, I'd like to show you the Dow 30. Looks like we definitely had a decent start at the beginning of the day pre-market. Sort of throughout the day without any of the stimulus talks happening. We saw a sink here. So we definitely had a sink looking at the hourly chart. We'll go here for the Dow. We started off going on an uptrend here and basically down about, we went from 28,765 all the way down here to 28,216, finishing off the day at about 28,312. So we had about a 0.86% pullback in the Dow. The S&P, definitely we had a pretty steep fall there as well. Just a repetition of some of the other charts. Russell 2000 as well. If you look, the interesting thing with the Russell 2000, if you bring it on the daily chart, you'll see that the Russell 2000 small caps are only about, let's say, 4% off from the all-time highs that they had back before the March plummet here, before this cliffhanger. So, Russell 2000 definitely looks like a bargain. Definitely a bullish chart pattern here. You see this chart pattern here that we have forming a bullish chart. I definitely feel like if we do get positive stimulus news, they could definitely send the Russell 2000 here to make new record highs, breaking through that previous March high. So that's the only sector, other than the Dow, the S&P, the tech sector. As you can see here, tech is definitely way overblown from the March level here. But still, looking at the S&P and the Dow, Russell definitely is the wise investment, I would think, if you're looking at it from a long term. If you're a young person looking at trading, I think Russell 2000 is definitely a decent bet here if you can get in an ETF or something. So, but definitely, I'd like to see this maybe have a pullback soon. Around the 1520 level. Here we had the support here at about 1459. Would be a great place to be able to add long-term shares. So if you look here, we're definitely over on the MACD, over on the RSI, signaling that a possible sell-off could be coming soon. Excuse me, guys. And the same with the tech sector here. Tech sector has kind of been beaten up a little bit more than some of the other ones. Just some of the high-flying names have such a huge run in the past month or two. So, but if you look here, I believe that some of the trends in the market, some of the pullbacks that we had were just a sharp reaction to people getting in at the beginning of the day, possibly running it up on possible stimulus news, and then no news coming out. So then we had a pullback. If you look here, the 10-year Treasury is very strong. Money has definitely been flowing out of the 10-year Treasury since we're up at about 0.77 on the 10-year Treasury, and we're in the green by about 2.2% today. So you'll see that the market is definitely strong. The money's there. I just believe there's a lot of day trading, a lot of money going in and out, going into the market, hoping for a stimulus deal, and if they don't hear anything by the afternoon, the money's coming out. So that's a usual trend that we've been seeing here for like the past couple weeks of trading. Definitely a volatile trading market. If you're looking at trading this thing on the short term or looking at it, I highly recommend the daily chart here, using an 8-hour chart. If you're looking at the 5-minute chart, even the 15-minute chart, there's just too much chop that goes on throughout the day. You'll be driving yourself crazy looking at this stuff. So, but yeah, I mainly like sticking to the daily chart here, and it definitely cuts out a lot of the noise that you have throughout the day. So, all right, guys. Well, I'd like to show some of the stocks here that I'm looking at. Skyworks here is definitely a strong stock, I believe. If you saw some of the pullback in Apple stock, this stock has definitely held its ground. Skyworks is in a lot of mainly all the 5G phones. They make a lot of the parts that go in 5G phones. So with the sale of 5G with Apple, Samsung, they'll definitely gain a ton of market share. And It is kind of overpriced at this level. You'll see the RSI and the MACD is pretty high, so I'm looking at this one to maybe get back into Skyworks. Probably around the $140 range if we have a pullback in the market, maybe add to that point there. I did buy it in the last video that I had. I bought it at about $140 and wrote it up to 150 now. It definitely went up above 150 to 160, but like I said, guys, I'm always looking at pulling profits in the short term. There's a lot of volatility with this market, and you definitely don't know where this thing's going to go. So looking at stocks and things like that, there's definitely a lot of risk to it. So, if you're a long-term investor, you won't be worried about any of this. But I would definitely, if you're long-term, I'd definitely wait for like a pullback prior to adding some shares into Skyworks. But it's definitely a good company. I could see if we get a pullback would be great. Only because the future of 5G, especially with the Apple stock, we're looking at Apple chart here, it's going to have a strong future, and a lot of the analysts came out and they predicted that 5G is going to have one of the biggest runs that it's had ever since 4G hit the market. I believe 2011, 2012 was when Apple, companies like Apple, Avago, Skyworks, all these tech names basically they skyrocketed with the announcement of all these new phones and just people switching all their phones over. So I definitely feel like talking to some friends, talking to a lot of people that I have, they were definitely holding out for a long time before spending money on a brand new phone. And now since the iPhone 12 hit with 5G, some of the Samsung phones, I believe they're definitely going to be, there's definitely going to be a huge, this is definitely going to be a huge money maker for Apple. So the good thing to keep your eye on is if you look at some of the telecommunication stocks like Verizon, and AT&T, once they start to report their earnings calls, you can kind of get a feel on how Apple and Skyworks are going to do. Um, so I'm definitely looking at getting more Apple here. Apple, I added a bunch to Apple when it hit the $108 range around here. This looked like a strong support level at that time. We had a little run up to about 117. Now this looks like the new support level that we have here, about $114 range. As you can see, it tested about 115.87 here today. It ended up closing at about $118 a share. So in the short term, this looks like support here, about 115 bucks a share. If we break that support, I could probably see this going to about 107, $108 a share again. If nothing really happens with with the stimulus talks and we see a big break in the stock market, this could definitely go all the way down to the pre-split level, about 93 to $95 a share. That seems like a very strong support level here. So, if it ever hit that, I would definitely be sort of backing up the truck and loading up a lot of Apple stock for the long term. The company's just massive. They have $1 trillion in cash. I don't think they're going bust anytime soon. Apple could come in and buy any company that they want without even batting an eye. Um, so yeah, Apple's pretty strong. I'm looking at adding them in the short term. And I also want to show MoneyGram stock. MoneyGram's pretty powerful here in the short term. They broke the long-term ceiling that they had here that went all the way back to October 21st of 2019. You're looking at about the $4.60 level. You'll see that here. Today we about settled at that level. It hit that bottom and we settled at about the $4.78 level. So we broke through that ceiling. So from this point on, I don't know what's going to happen going into the earnings call. They're going to report on October 30th. In the short term, I do know the MACD is way over. I mean, this stock is way overbought in the short term. It doesn't mean that it can't go higher. If we look at what happened to the price action here before the last earnings call, you'll see that the RSI was definitely up to about, or the MACD was definitely up to about the 53 level, and right now we're only at about the 30 level here. So it could go higher. It could definitely go up higher, especially with any positive merger news. There's also Western Union buyout news where Western Union made an offer, I believe, back in March. They never disclosed how much the offer was for. MoneyGram has never rejected the offer, and they haven't accepted it. So that offer, I believe, is still out there. They could be trying to negotiate a merger. Maybe that's causing the huge price in stock, the huge jump in the stock. Uh, but we'll just wait and see what happens there. I'm definitely looking at adding a little bit on any pullback here on some of the pullbacks. Probably take half of my profit going into the earnings call. Just looking at, the history of MoneyGram stock. Even if they had really good earnings like they did in their last call, they beat the expectations that the market had. The outlook that they gave was not what the market wanted with the whole, with the pandemic and everything. So it definitely just, the stock started selling off and it ended up about the $2.75 range. So yeah, definitely a very volatile stock. This thing could swing 10 to 20% in a day. That's not uncommon. So it's one of those stocks, you buy a little tiny portion of, and you keep, if you're into that sector, and just ride it out, ride the waves with this stock, because anything could happen. So we'll see. And another stock I'm looking at is Afria. You'll see here, this is a very interesting pattern here. I mean, if you split this pattern down the middle here, you'll see it's a symmetric pattern here. I don't even know what you would call this. Kind of the devil formation here, a devil head, ears, yeah. So, so so we'll see here that, before the last earnings call, this thing definitely had a run up here. You'll see it ran up. It ran up from about, we had consolidation here at about $4.33. It ran all the way up to about the $5 range, all the way up to $6. And the earnings call happened. They basically didn't meet the expectations of what earnings had. So it just started to sink, and it found the support again at about the $4.50 range. So it's basically been trading there for a very long time. And it went all the way down back to the support of about $4.30. And like it did here, it had a huge run up going into the earnings call, and not what the market expected. So it had a huge sell off. So I'm looking at picking this up. I picked some up back here before the last earnings call, and wrote it up to about the $5 level, and that's where I sold. Now I missed out on some more gain here, but that's fine. The profit that I made in this huge jump was enough. So short term, I'm looking at playing Afria, looking at picking this up again around the $4.30 range if we do get there. If we have a decent market pullback, if it could definitely hit that or even go lower. Because the only catalyst that I see for Afria now are only other wheat stocks that are going to be coming out with the earnings call, like Canopy Growth. Some of the other names that could definitely affect the stock. Also, if the Democrats come into office, I think we could definitely see a rise in all wheat stocks. So I would definitely keep Afria on your list because they are one of the best wheat stocks. They're the only ones that really make positive cash flow. They definitely make a profit. But they're one of the most disappointing wheat stocks because the company is such a such a great firm. It's just, I don't think the market likes the CEO, and it's just been beaten up in the short term. So, but if you're looking at, swing trading this thing, you could definitely swing trade this on like the seesaw effect here. So, the next earnings call isn't all the way out till January 14th. So, I'd kind of wait on this. I'd wait about, a month and a half to 2 months out from where we are now. Probably pick this up it'd be great if I could pick this up again at around the $3.75 range. The $4 range, I would probably start picking some up again on a swing trade. But long term, before the next earnings call, I'd probably pick some up around 350 a share. And so that's a possible swing, but like I said, this thing has a lot of risk to it just because of the sector that it's in. But I just wanted to bring some of the interesting chart patterns that I've been seeing here and some of the trade action on Afria. It's kind of like an easy to figure out stock. So, all right, guys, just wanted to bring forward some of the things that I see in the market trends, some of the stocks I'm looking at. Please give me a like, comment, and subscribe. And let me know what you think of any stocks that I'm missing out on, anything that you would like to look at in a video. All right, guys, thanks.